focus on cash flow savings through tax planning. I'm not sure if we've got any charities on the call today, but the section I'm going to cover is probably less relevant for charities unless you've got trading subsidiaries. But if there are charities on the call and you have got concerns about your tax at the moment, feel free to drop me an email separately, and I will happily have a chat with you on that. So the first thing I wanted to talk about, and this is something you're probably aware of already, it's been widely publicised, is the time to pay arrangements that have been put in place. The first of these is for individuals and sole trade businesses. So people who are normally due to pay their tax on the 31st of July 2020, so just a few months away, there is an automatic deferral of these until the 31st of January 2021. So there's no need to speak to HMRC and ask permission to do this. It's an automatic deferral of the taxes. There is also deferrals available for companies to help them maximise their cash flows. This isn't an automatic deferral though, so you actually need to contact HMRC, and you can do that on the number shown on the screen. You can either call them up or you can arrange an HMRC web chat. Both might take a little while to get through, but we're finding that HMRC are quite sympathetic when you do get through to them. You need to be aware that if you are arranging these and you have got existing loans in place or banking arrangements, that you just check the impact they could have on these. So the next thing you could also do is consider accelerating tax repayments. So if historically you have been profitable, so you made profits last year and you paid tax, but you are now finding you are making losses, you should be able to carry these losses back to the previous period and reclaim the tax. In order to do this, you will need to complete your accounts and submit your tax return to be able to claim back this money. So that's an incentive to get these things in order and done quickly. Another thing you could look at to accelerate repayments is if you have either made quarterly payments already or if you are due to make more quarterly payments of tax. So quarterly payments of tax are due when you've got a large company which has got profits over 1.5 million. So this may not apply to some people on the call. But if you have made quarterly payments already and you believe you've excessively paid, then you can contact HMRC without having to complete a tax return and accounts and just request a repayment. And normally that's not a problem. If you are self-employed and are suffering due to the reduced activity and profit as a result of COVID, then you should look at the self-employed income support scheme. And this should be able to help with your cash flow. We are not expecting HMRC to pay out any money until probably June, but HMRC should contact you in mid-May to discuss this with you. Again, they will contact you. If they don't, I would urge you to get in touch just to make sure that you are on their radar. You will be able to qualify for this if you have trading profits from your sole trade business of not more than £50,000, and your self-employed income is not more than 50% of your total income. And the way they will measure this is looking at the last tax year, so that's the tax year 18-19, or the average over the last 3 years. Now, so there's various complicated rules if your self-employed status only started in these years. We haven't got time to go into that now, but I can talk to anybody if they need that. So when we talk about trading profits, these are the taxable trading profits, so not just your accounting trading profits, but the taxable profits after they've been deducted any losses, after you've claimed any capital allowances, and added back things like depreciation. So if we could now move on to the next slide, please. Thank you. So this first section is really for companies only, and this is again looking more into the revive stage of the business and looking for ways to get cash back from HMRC. And this is looking at R&D tax credit claims. This is an area where you can claim cash back from HMRC even if you haven't paid any tax. So it's a brilliant scheme. If you are a company which has been working on a project which is seeking to achieve an advance in science or technology, then you may be eligible for this scheme. And the way it works is you can claim an additional corporation tax relief of qualifying expenditure. And under the small scheme, you can claim additional relief of 230%. So let's say you've got staff costs of £10,000 working on a particular R&D project. Rather than getting tax relief of £10,000, you will actually get relief of £23,000. And so therefore this reduces your corporation tax liability, or if you're making a loss, it will push you into a further loss position. That loss can then be surrendered in exchange for a cash repayment of 14.5%. If the business was profitable last year, rather than exchanging the loss for cash now, you may consider carrying that loss back to the previous period, because you may get, rather than getting 14.5%, you might get, say, 19 or 20%, the rate at which you paid the tax last year. So I would urge any companies who haven't claimed R&D and think they may be eligible. We find a lot of companies just think, oh, I'm not doing any R&D, I'm not eligible. Have a look at it, or a lot of people we speak to just haven't quite got around to doing it. This is a great time to look into that and see if you are due cash back. We are finding at the moment that HMRC are actually prioritising these claims. It was taking them a long time to make repayments last year, but we're finding they're coming back within less than 4 weeks in some instances at the moment. If you are an R&D company and are claiming repayments and have also applied for a coronavirus business interruption loan, or a CBIL, then there's been a lot of sort of press coverage about this and impact that CBILs can have on R&D claims. It's a little bit of scaremongering, I think. CBILs are a form of state aid, and if you receive state aid for a particular R&D project, then that can prevent you claiming under the large scheme. So there's been kind of press coverage saying, oh, if you claim CBILs, you'll not be able to claim your R&D under the small scheme. But most CBIL loans will not be for a particular R&D project. They will be for the business as a whole, so just general support for the business. And so in most instances, they should not impact on your R&D, but it is something just to check out and be mindful of. If you're unable to claim under the small company scheme, then you can look to claim under the large scheme. You don't get such a good rate, but it still means you can get a cash repayment. Then finally, a few other points just for businesses, whether you're sole trade, a company, a partnership, to think about and see if you can get any cash back from HMRC. The first one is, if you have acquired any capital, commercial property or assets in the last few years, check whether you've claimed all the available capital allowances. So if you've bought plant and machinery, have you claimed all your capital allowances? If you've bought property, have you claimed capital allowances on fixtures within these? Have you claimed structural and buildings allowances? So often we see companies who just haven't claimed all that they are entitled to, and this might be a good time to go back. If you've already paid tax on your profits, then you may be able to trigger some repayments. The next thing you might look at doing is considering changing your company's year end. This might ease tax payments. This is more of a situation where, let's say you had a big profit last year, and this year you've still got a profit, but it's a smaller profit. So you might decide to extend your company's year end from the normal 12 months to, say, an 18-month period. And it just means that the profit is then spread over the full period, and therefore the second tax payment is it will come at a slightly later date. Other people might be looking at actually shortening their year end, because if they've got a loss and they want to carry it back, it means that they can submit their tax documents to HMRC quicker. Or if they've got an R&D claim, again, sometimes people decide to shorten their periods so that they can submit them quicker and get money back. The next point is about delaying filing of company accounts. That's not really going to help with your cash flow, but just thought it's something we should mention. Companies House are allowing an extension of up to 3 months at the moment if you speak to them because you can't submit your accounts because of coronavirus. It's not something I would encourage. If you are able to do your accounts, I would keep your affairs in order, and it then also allows you to submit your tax returns and claim some of these repayments. The next thing you might look at is just reviewing your business structure. It might be that you've got assets in a business and you decide to put them into a holding company to reduce the risk of these. You might decide to separate out some areas of a business into a separate company. We have some clients who've got lots and lots of companies, and really they could just have one company. So you might decide to simplify the structure at the moment, and that would save on fees and admin. And then the final point is just to consider employee incentives. So employees are vitally important to businesses, and businesses are having a hard time at the moment, but so are employees. So it's looking at ways to incentivize them. I know people haven't got lots of cash available at the moment, but you could do things like set up a share scheme where you're not actually having to pay out money to employees, but that would maybe help incentivize them. So as Scott said, we're hoping that we'll go through the survive phase, the revive phase, and then hopefully if people implement some of these things, businesses will move